What is going up, everyone? So in today's episode, we are going to be learning the 10 golden rules for beginner traders and anyone who wants to start trading stocks. All right, first one. The first rule is never add to a losing trade. This is very important. Let's just pull up any stock here let's pull up SNES. So if that's, say you guys got a terrible, you just kind of bought in at the wrong time. Sometimes, yes, it happens. So let's say you bought in at 2 or 140 flat. You're feeling this momentum. You're thinking it's going to go up to 150. You see this little pullback area, and you just continue to add. You're averaging down. You're averaging down. And now you realize, holy crap, I'm down, let's say $100, $200, maybe $1,000. Now you don't know what to do. That's why you never add to a losing trade. And this right here is a doji candlestick, and that's a reversal. You guys have to understand what these candlesticks mean and how to trade them. All right, rule number 2, never add to a losing trade. This is, never lose more than 1 or 2% of your trading account. Alright, so meaning if you guys buy in and this is just, you bought in at 147 and you're just getting tanked down, you should have your stop at 1 or 2%. And always use mental stops, because sometimes you'll have a nice bounce at where your mental stop was and it will continue to go up to your target. Rule number 3. Never trade something you don't fully understand. So let's pull up RXII. I just called this out here on my group chat that we were going to have a push all the way up to, pre-market, or to the high of day at, 231 here. But so I traded this stock. I bought in at $2 and I sold at $2.15 right here. Then I sold at $2.17 right there. And I fully understood what this stock was capable of, and I knew that my stop loss was going to be at 1 or 2% of my trading account, because I didn't want to hop in a trade and lose a bunch of money. And so that's why I always recommend to cut your losses very early. If the trade isn't going your way, suck it up, just get out of it. You'll be very grateful that you did, especially starting out with a new account. You're going to be very frugal with your money, and you don't want to, risk too much to make a little. Rule number 4, trade in the direction of the trend. This is very important. As you guys can see, we had an upward trend right here during the day. That's why I traded it. I saw that it bounced right here, and now it was just consolidating, and the buyers were stepping in, I saw. So I realized that this stock was going in an upward trend. I bought in at $2 with, a couple thousand shares, and I just continued to ride the wave until I got to my target price, and that was, I wanted to get to 220, but I didn't see it coming because I saw a lot of sellers stepping in. So I sold at 215 and 217. And that was about a 7.5% win, which is very good. I'm proud of it. I'm not worried about. So that's why I always trade in the trend. Never say, okay, I'm gonna go right. I'm gonna go anywhere, and I'm gonna buy in. I'm not gonna, this stock isn't the best one to do because it's still going in that upward trend. Well, it broke trend right here. So never say right here. Never be like, all right, I'm going to buy in at $2. The reason of that is because it's going in this downward trend now. It broke through our trend line. All right, so rule number 5, only look for, Only look for low risk, high reward trades. So a good number is 3 to 1. So if you can risk $1 to make $3, that's very good. And, there's many different ways you guys can figure out how to do your risk reward. Look at support and resistance lines, stuff like that. Your stop loss, your mental stop loss. Just kind of always have that in mind and realize what your profit and what you're risking. rule number 6, trade your plan. Don't go on Google and look up top trading strategies. I mean, when I first started out, I had no idea what the heck I was doing. So that's what I did. And, you're going to have to find something that works for you. Each trader trades differently. Each trader is kind of like a different, player in the stock market. They use it differently. They utilize different things. They have different charts up. Some people don't even use time and sales. So just find something that works for you and stick to it and just try to be the best trader you can be. That's very important. All right, rule number 7 here is, find your methodology that fits your personality. Kind of like what I was talking about, number 6. You're going to have to find your own thing. Don't copy someone's. Don't just do it for the you guys know what I mean, I'm sure. Just don't steal someone's. What I did when I realized that I was not doing well is I kind of picked bits and pieces from each of the top traders I knew on YouTube that I watched. I realized, okay, let's say this guy, I liked how he set up his charts. This guy, I liked how he, where his entry points were. I liked how this guy had his mental stop loss and not a set-in stop loss. Stuff like that. Just find something that works for you. So number 8, don't trade before you have a complete trading plan. This is including rules and everything. All right, so I have my rules right here. I printed this bad dog out, laminated it. So this is my trading plan. I have my entries, my exits, what I look for pre-market highs. So I have this all set up. It kind of fell down before I started the video, but normally I can use a whiteboard marker and I can just say, okay, our pre-market gaps up more than 4 or 5% for this stock. If it is, I could put a little dot by it, and that realize that, okay, that rule sticks. Let's say, the float is more than 200 million shares. All right, let's cancel the stock. We don't want it. But I have all that mentally now, so I don't have to virtually check it. I just kind of keep it out just for me to keep an eye on it, make sure I'm still doing my thing right. All right, number 9. The size of your wins and losses determines your trading success. That's what we're here to do. We're here to make money. Don't go on, YouTube or Instagram and say you're making all this money if you're not. If you're, because it's your success, and that's really what I know. It's kind of like you don't want to show off, but just don't. It's not worth it to I don't know, but just trust me on this. You're here to make money. You're not here to show off. That's all right. Number 10. The risk management rules determine your success. So risking is what we're doing. We're gonna have to find these stocks that have a very good risk versus reward, and we don't want to risk $1 to make 50 cents. That's not right. We want to risk $1 to make $10 or to make 20. So we can try 10, 15, 20 times before we start losing money. But all right, I hope you guys enjoyed this video on the 10 golden rules for beginner and new traders. I hope you guys enjoyed this video. Go down and subscribe to my channel. I would greatly appreciate it. All right. Peace out, guys. Remember to always stay happy and stay positive.